Going to trade the NBA.com. This is John Reporters for the 23rd, and as we see, we've got one more day, half day tomorrow for the Christmas Eve, and then of course Christmas Eve turns into the break period. Of course, futures in the Asian markets will still be open, so there'll be some light movement in between that closure. We can see from a daily though, steel turning up. Still don't have any support from the red-green. But we're holding right around the ABM yellow, and still have rising short configuration. So from a DOC spread standpoint, you have everything you needed. It just has not been able to follow through. There's just been enough support. We haven't dipped below the red line either. That doesn't mean that we're not going to see some back and forth. And the ranges, starting from the other day back there, have been pretty good. And even going into the pre-market this morning, we saw a significant decline that, of course, was bought back up. I think the original dip in the pre-market was the talk about Trump denying the stimulus and then demanding a significant increase in the amount of money going to individuals. And it's just a lot of pork within that. But you can see from an NQ standpoint, we've always talked about this being strong. It's well above the ABM, holding between the ABM and the 100%, which is a good range to be. It's just as long as you have that steel rising, this the first dip of the steel and rise of orange, that's going to be a much more significant short opportunity. And because that stimulus did not go through, Euro fades back just a little bit, but not really fading back as much as just filling the positive extreme. So simple and clean there, and as well gold. This is really going to be a question of, again, like I said, whether they talk about additional liquidity pumps going into the beginning of the year, if the lockdowns are going to end, all those kind of things weigh into it. But from an intraday standpoint, here we look at the 5K. This happens to be the DOC Power 2 cross, and some clean action. I mean, literally, we had our DOC spreads take place. This one you had it on rising red, and then we get the plateau of red right at the zero, and then it begins to trail off. So it's just a question of, do you wait for the plus 13.5 to enter it? It does it a little bit later here because it's looking for the clear cross and dip of red DOC coming lower, which took place right there to enter the broad short signaling. But here was something we talked about from an interesting standpoint on the turnaround setup here, where the steel drops below cyan, orange came above that particular point, and then it inverted to a positive. But we talk about this where the little dip of zero when you're in a no steel reset, meaning you didn't get that initial dip within a reasonable number of bars, 5 or 6. I usually look for this dip to take place and then see an orange that comes down below the red right here as that turnaround. It's going to be a lot more momentum built to it, and sure enough, that's exactly what you get. But on the converse, as soon as that steel crosses back over cyan, cyan rejects green, and orange spike, that's the opportunity to short it again. Of course, you get another clear one that took place right over here, likewise, and that led to dip below, as well as there's the orange, and we can see how many bars it is. It's 1, 2, 3, 1, 2, 3, 4, 5, 6 bars, and on the 7th one makes the full turnaround. That's getting close to the range. You're below negative 13. I'd wait until I get the orange candle, which is right there, because that would be the red DOC reaching the 13.5, which, since it didn't come a little bit tighter, I'd be a little more suspect. But then certainly, of course, the green crossing cyan, and that you got all your go signals, and fine, you're right at the 23%. So not that far off, but nonetheless still produces the exact same thing. And that should convert to green. I'll have to check the code there and find out why it doesn't. Then we end up with a bunch of muck going through, but most of it's happening within generally improved DOC red, and then finally it tilts back up again, and as we get right back to that zero, you get your first DOC spread right there, and then it continues to move across pretty much with another spike, another separation of green to cyan. So anywhere along here you could add into that setup as more comfortable, particularly when that red DOC starts to break down, and follow that one down. Fairly clean. Yes, you had another dip of the orange to zero and relatively close. Didn't produce as much momentum, but even though it was sort of flat, you did have that pretty significant spike from it. So from the 77 went all the way up to 84. It's still a pretty decent move. But within it, you'd already had the short setup that had developed earlier right there. You might think that you were out of your mind when it did this skyrocket move, but as you can see from that skyrocket move, even if you were at that 77, you shot up to the 84, but then all the way down into the 50s. So that was a significant move. And again, dip below zero, boom, there's the orange below red, and that's what we've seen. Now, of course, positive extremes all the way back to right around the 68 level, and then you get a whole other series that's more likely to fill in the nearer term, which is down at the 74, so almost 10 points from where we're at now. And that's what we'll be looking at going into the open. Typically, in this case, you get a little sideways weakness right here, and then it pops back up to attempt the high and see if it can break out of it. And if it can't, then you're likely to get those filled. So that's what I'd be looking for. We'll be taking off for the 24th and 25th, and then be back at it for beginning of the new week. As always, though, if anything new or interesting pops up, I will certainly put on the Skype chat. Trade well.